While global markets have staged a smart rally over the past year, Indian markets have remained lackluster. According to strategists and experts, one of the key reasons behind India's underperformance is its position as an anti-artificial intelligence play. In fact, let's hear it from Ridhan Desai, the managing director at Morgan Stanley India, who spoke at CNBC TV 18's Global Leadership Summit.
The focus of global tourist capital, the one that looks at short-term returns, has been on AI. And India does not really offer an AI trade.
Also, here's Neelkant Mishra, the head of global research at Axis Capital, who chimed in on his views.
The view on India among foreign investors that I see is not just neutral, that there's no AI, it's actually negative, that India is an AI loser, that Taiwan and Korea are AI winners because they have Samsung and SK Hynix and TSMC and they are beneficiaries of this boom in AI. And India is not just no player, but actually Indian IT and all of the GCCs, etc. will suffer.
Therefore, as Dalal Street does not offer many AI or AI-related stock opportunities for a trader, foreign investors have rotated their money out of India and into other emerging markets. So far this year, FIIs have sold off nearly 2.5 lakh crore rupees from the cash markets. This in turn has given investors poor returns. FIIs had already begun selling in Indian equities as weak earnings growth had kept sentiment in check. This comes despite the government's attempts to boost consumption. In comparison, most emerging markets that have exposure to the AI theme have given investors very stellar returns. Global AI plays have absorbed much of the capital that has been moved out of India. China actually leads the AI theme, with the country's AI stocks valuations nearly doubling in 1 year, growing 96%. South Korea is close behind, with the market cap of AI firms jumping nearly 94% in 1 year. Japan and Taiwan are also seeing very strong momentum, with their AI market caps rising more than 60% and 47% respectively. And in the US, which is the world's biggest AI market, valuations have continued to surge, with AI companies adding over 40% in the past year. Across regions, the message is very clear that AI is powering some of the strongest equity gains across the world. Well, more specifically, let's look towards emerging markets, where there is a clear rotation towards tech-heavy markets like South Korea and Taiwan, as India's valuations have remained elevated and the earnings momentum has stayed weak. In the September quarter alone, FIIs bought about $15 billion of Taiwanese equities, which is the highest quarterly inflow the country has ever seen from foreign investors. The positioning in South Korea also is at its strongest in over a decade, while foreign investors have continued trimming their exposure to India. However, there's still hope for us, as domestic earnings have started to see an improvement with the government's repeated attempts to boost consumption. FY27 may be a better year for Indian equities. Here's Neelkant Mishra once again on his outlook for Dalal Street going ahead.
We have been tightening fiscally and monetarily too much, therefore core inflation has come down. Food inflation has been falling for the longest period, as RBI has documented. So both of these will reverse, and so we are going to be back to 11-12% nominal GDP growth in 6 to 9 months. And then the earnings cuts start to slow down, and they've started to slow down. I think maybe some earnings upgrades can happen, and the roll forward gains will start coming through. So I do expect that in the next 12 months, we should see much better support for India.
Not just that, experts have also noted that the AI rally could be losing steam. The Nasdaq has slipped 3% last week, indicating the first real pause. Analysts say that this is some healthy traction. The Bloomberg AI index has also slipped 4%. If this moderation continues without sharp volatility, it could actually lend some stability to the US market and prevent a bubble from forming. And then if a bubble doesn't form, it doesn't burst. As a result, investors will be very closely watching to see if this trend sustains. If the AI trend takes a pause, it could largely work in India's favor. Since we have sat out the global AI trade, a slowdown in the AI rally might lead to FPIs and FIIs returning back to Indian markets and rotating their capital into non-AI plays like India. And the timing also does align well. Like I mentioned earlier, earnings growth is improving and is expected to accelerate going ahead, which will provide very fundamental support for a potential uptrend. So what do you think? Let us know in the comments below and tell us your thoughts on AI. As always, stay tuned to Moneycontrol.com for more news updates, and thank you for watching.